Welcome to CoveredCall ETF Investing, your central hub for deep CoveredCall ETF data. Today, we are going to be looking at the best of CoveredCall ETFs here in 2024. And by doing that, we are going to be diving into the CoveredCall ETF AllStar tracker, a spreadsheet I created at the start of 2024 to help consolidate the chaos of information that is out there, things you would find on Yahoo Finance, Google Finance, fund manager websites, compile it all into one place that you can easily filter through. So I'll show you what I mean if you're new to this, but I mean, if you're someone who's been following the channel for a while, you know all too well about the CoveredCall ETF All-Star Tracker, and many of you use it as well. And lots of good feedback about it, but let's get into the Canadian tab, the top performers in the Canadian tab, the top performers in the American tab, the biggest distribution growers this year, the highest yields currently out there, the biggest AUM growers, what were the best performers in each sector. Let's also look at the performance and the breakdowns of the all-in-ones. Lots to get to, a very data-driven video, but hopefully through the chaos we make it clear. Let's hit it. So the very first tab that we're going to be looking at here is the Canadian Tracker tab. For most of you that watch this channel, which is predominantly Canadians, this is the tab you guys are probably using by far the most. Now, what surprised me about filtering this for the top 10 here at the end of the year is that ZWT is leading the pack total return in performance. And why would this surprise me? Especially maybe if you're not very familiar with these funds. Well, ZWT's yield is quite low. It's probably something like 3.71%, 3.37%. So on the total return side of things, it's not really getting much help from the yield, which more or less just goes to show that ZWT is one, it doesn't track an index like the NASDAQ 100. It picks pure technology stocks, and it's just knocked it out of the park with those picks. And on top of that, it's not a leverage fund either that we see from many other CoveredCall providers. There is no 25% leverage on this, none whatsoever. So ZWT went into beast mode this year, and it basically wins the top spot for the total return factor, and not just by a couple of percentage points. I mean, you're looking at 5.5% through the next fund closest to it, right? Everything else is kind of jumbled and close together, but ZWT is really outperformed in that way. So yeah, I mean, it acts more like just it doesn't really even act like a CoveredCall fund in a sense, but I mean, if you're looking to get, maybe you want that higher, or I should say potential maybe higher return from just a pure selection process in the technology sector. Maybe you don't care as much about the yield, but maybe, get a little bit more of a yield than, say, the NASDAQ 100. Well, I mean, ZWT might be up your alley. In next spot, is going to be call.b by Evolve ETFs. There are a couple of financial CoveredCall ETFs in here, and we shouldn't be surprised by say call.b, call.u, ZWK is in there, and even BFIN, right? With interest rates being hiked at their highest rates, basically in history, or at least in the last 40 plus years, to see the kind of rebound from this sector, again, not much of a surprise there. Many of these kinds of funds are, once again, stock selection process. Are they really tracking anything in particular? Not necessarily. These funds take an active approach, especially with their stock selection. And I would say one of the standouts in here, albeit it just made it into the top 10, is actually BFIN. The reason for this is that this fund, just as the name says, North American financials, I believe it might be the only CoveredCall ETF that does this, that invests in financials in both Canada and the U.S. So which makes it separates itself from the pack in that regard. A nice surprise here is actually seeing USCL. It's really the only diversified fund that we see in there, and this is a leveraged 25% S&P 500 style CoveredCall ETF at 38.33%. So good on USCL for making it into the top 10, and especially just purely tracking an index. It's the only thing in here that has not undertaken a stock selection process. It is trying to track the S&P 500. Also good to see QMAX in here, a relatively newer fund. I want to say it was I believe January of 2024 that this fund came online. So a Hamilton fund, stock selection process, roughly about 20 companies or so in there, unleveraged. Always good to see how strong. If you have strong stock selection, you don't necessarily need the leverage. Not everything needs leverage, albeit it certainly does help. Now, if you get the combination of amazing stock selection with the leverage, boy, that's a recipe for strong performance. So good to see a couple of funds in here, unleveraged, that show that the talent of picking these funds, or I should say picking these stocks, have basically there's no need for leverage or higher MERs that would result in the borrowing cost from those funds. If you are interested in having access to the CoveredCall ETF AllStar tracker for yourself, there will be a link in the description below to get you to my Patreon, where there are 2 tiers. There's access to the full tracker, which is every single tab offered in the tracker. It also gives you access to exclusive videos, an exclusive chat where you have access. You can ask me questions. Also small group Zoom discussions that I put on every single month. So great value for what you get for that. If you're a little bit more budget conscious on that end, the partial tracker also just gives you access to the tracker, a couple of tabs, the main ones, the Canada tab, the US tab, and then you can also follow my portfolio for $5 a month. So with that being said, if you like what you see, head to the description below and pick it up for yourself. Now we've moved on to the USA tracker tab. This is the only tab where I'm going to be discussing funds that have been developed in the US. For basically everything else in this video, it's all Canadian funds. Even if they track US listed stuff, this is the only tab that I'll talk about the outperformance, the top 10 performance year to date total return from CoveredCall funds in the US. And what you notice immediately is, especially if you've been following this stuff and following the channel for a while, we got a lot of yield max stuff in here. And if you're not really all that familiar with yield max in the US, they focus on many single stock CoveredCall ETFs, or more specifically synthetic CoveredCall ETFs, basically ETFs that track the price of an underlying asset, not necessarily holding the underlying asset itself. So MicroStrategies, the shock of shocks, right? It has a strong correlation with Bitcoin, and therefore it's 204% outperformance, by far doubling up. Even Maxi, which is a fund that gives you that pure exposure to Bitcoin at still an amazingly impressive 104%. But really the theme of the top 10 is single stock ETFs and Bitcoin. And you can tell by the fund category: technology, single stock ETFs, and crypto. Now the yields are also, might as well touch on these, astronomical as well. We don't really see these kinds of yields on the Canadian side of things. Maybe now Now, certain funds that single stock ETFs on the Canadian side, especially by Harvest, that are now coming out, are starting to dabble in the the 20% range. But I mean, like the name says, yield max, they don't joke around with that. Like, that's their mandate. They're going for absolutely the highest yields possible, and give you some income along the way, along with the ride. If you want to just take up these single stock ETFs, put it in the portfolio, get some yield on it. But yeah, no diversified funds in here whatsoever, and that just goes to show you the main differences between the Canadian tab and the USA tab. Naturally, the more you're diversified, yes, the more you're going to cushion yourself in the chance of a correction or even a crash. But it works, right? It correlates on the other end as well, meaning having a more diversified fund is going to drag on performance. And the more stocks you knock out from a particular ETF and concentrate it down into, honestly, it's basically down to one, the higher chance you're going to get for the outperformance, but the higher chance you're going to get for that falling performance as well. And yield max is showing, hey, if you want both the top potential yield with top potential performance, they're basically advertising, come to us for that, because we'll give you that. And I mean, it clearly shows in some of the top performers here. And even, what's even interesting is to see Curve in here as well. They're sort of I would say they're like a grandpa version of yield max, right? So they also focus on single stock ETFs, a little bit more conservative in their approach. AUM's really tiny compared to yield max. Yield max blows Curve out of the water when it comes to attracting capital into their funds. So yeah, even Curve makes it in here. Solid performers from both Amazon and Netflix. What else do we got in here? Roundhill, YBTC, and Neos's BTCI. Again, I mean, if it's linked to crypto, if it's linked to Bitcoin, it shouldn't be a shock that we're going to see these types of funds in the top 10. It'll be interesting to see if I do something like this at the end of next year, to see what the difference is in the top 10. I wanted to take a moment just to ask you all that if you're interested in me talking about a particular fund that you really want me to cover, December 22nd, I'm going to release a video that is basically a community choice. So in the comments down below, if there's a fund that you really want me to cover, and if it gets the most upvotes, then that's the one I'm going to do. I've put this question out here in the community tab. I've also posted it on Blossom, and you can also do it in the comments to this video as well. And basically, I'm going to add up all the thumbs up across all those different places, and whatever has the most thumbs up, I'm gonna do a deep dive into one of those funds. So if you want to participate in that, throw it down in the comments and see how people respond. Most thumbs up wins, and then I'll be talking about that on December 22nd. Now that we've looked at the Canadian tracker tab, the USA tracker tab, let's discuss what has led to some of this outperformance in distribution growth. So here we have the top 10 distribution growers here in 2024 from the Canadian tracker tab, right? So, and you can see here, this is the region these funds come from, is Canada. The first one by leaps and bounds is NVIDIA, YNVD by Purpose Investments. Again, the rules apply as we just discussed in the American tracker tab. The more you consolidate the fund down to its fundamentals, like basically just one fund, the higher chance you can get for an outperformance, total return wise, but also distribution growth wise. The NAV, the net asset value of this fund, has been rising like crazy, and in order to keep up with so basically what they're doing is they're writing higher call options, proportional to proportional to the NAV. So no surprise there, Nvidia done really well this year. That's all well and good. I think the more interesting funds with their growth have actually been these 4 evolve funds. EBNK, EBNK.B, and EBNK.U rising 141.67%. And then you got QQQY rising by 52.38. QQY is actually a fund I've recently picked up. I swapped out HTAE in my TFSA with QQQY, mainly because I wanted to put some unrealized gains to work, and I also get a higher yield with QQQY, and I wanted a higher proportion of return from the yield, which I get more with QQQY than I do with HTAE, but I've picked up HTAE inside a personal RSP that I recently just set up for myself. So I got basically I got both those funds. But what makes these 4 interesting is that from a mix of diversified funds, in my experience, we don't typically see these kinds of distribution increases, not like this. It might be typical to see, maybe, for this past year from diversified funds, we will get to all-in-ones, and I can show you basically the growth from the all-in-ones, which is going to be closer to the end of this video. But if we just follow EBNK and QQQY, we can see that EBNK, it's not like its growth was spread out through the year. It was all at one time, from 6 cents up to 14.5 cents, and QQQY up from 21 cents to 32 cents. So no doubt their NAVs have risen. That's just not something I typically have seen, as just this one-time immediate growth, just from 50% and 141%. But their NAVs have held, and they've been growing, and especially in the financial space, we know financials have done well, technology has done well, and these raises were done. You're right, they were done midway through the year, and I can at least speak for QQQY more specifically, that it still has naturally grown since then. So maybe they're just waiting for a good time just to raise it from its, I think it was maybe QQQY was hovering around 10%, and anyway, now it's much closer, maybe 14.5 now. Okay, then we got, what else we got? Some more single stock ETFs, YTSL. Not much more to speak of there, kind of more similar to Nvidia in that regard. Another surprise, probably Life.B. And you might be wondering, why isn't Life or Life.U in here? I would say for the first time this year, when did they? I think there's been a couple of raises, yeah. So one between July and August, and one between October and November. I want to say maybe but the one raise between October and November, Life.B got a raise, but I believe Life didn't get a raise. And so again, typically we usually see if there's a fund and it has a .B version and a .U version, if you don't really know what that is, typically you'll have a fund that'll be maybe hedged, you'll have a .B version, maybe unhedged, and then you'll have a .U fund with TFL.U, you'll have like the American dollar version. And they usually rise in sequence with one another, but not in this case. So yeah, not really sure exactly why that's the case. It's just maybe, I guess, Life.B, its net asset value has just grown that much more than just the underlying fund, which is Life. Next up, a couple of technology funds, TFL and TFL.U, rising a really amazing, basically 30%. And then we got Call.B, which is up 28%. So again, some really good raises from this year. Top 10, But I would say the biggest surprises for me were some of these evolve funds, which it's great to see, and that especially with a fund like QQQY, that it's actually holding up well on a price performance level. Next up, we got the biggest AUM growers from this year. Some pretty insane growers, or at least from where they started. It doesn't mean that these funds are billion-dollar funds, but at least from where they started, they've seen incredible growth. We see down the sidebar here a lot of Harvest, which is the single stock ETFs. Which all came out, I guess September, and they all started at roughly $1.5 million. Yeah, so we see 1.3, 1.4, and all of these have grown into basically 48 million, 38 million. Well, I should say 29 million. So tremendous growth on the single stock ETF side of things. That's where a lot of the interest, and I think more of the innovation will probably come out of in 2025. Harvest has recently announced a bunch more single stock covered call ETFs, including a all-in-one HHIS that will hit the market in short order, and it'll combine all of their single stock ETFs in one place, leading to a diversified fund that is gonna have that potential for outperformance on a unit price level and also yield as well. It will be interesting to see what that diversified fund's yield is going to be at. Will it be in the 20% range, just like a lot of these single stock ETFs that we already see? It's also going to be 25% leveraged out as well. So just goes to show kind of where the winds are blowing as far as where AUM is being attracted to, and it's the single stock ETFs. Harvest really has their finger on the pulse when it comes to that, seeing the popularity in the US, like we talked about in the USA tab. That's like indexes and single stock ETFs are by far the most popular thing on the American side of things, and Harvest picking up on some of that popularity to bring to the Canadian market. We got some bond funds in here as well, right? Pays at 38 million. What else do we got here as far as bonds? HPYM at 175 million. We've seen, I would say it was probably towards the end of 2023 that there was this explosion of bond cover call ETFs in the space. So again, not surprised by the growth, and once again, Evolve has a spot in here too, with literally bond at $184 million, doing quite well in its growth. And I mean, if we go back, we can see that the growth of all these funds, you get 45%, 121%. There's nothing that are low growers month over month. Yeah, maybe 3% there, 9%, but everything has grown significantly month over month. Do we have any diversified funds in here? It doesn't really look like it. No, it's just bonds and single stock ETFs that have seen the biggest attractors as far as money inflows into these funds. Single stock ETFs, bonds, and that's really it for the biggest growers. There's no way we can go through a cover call ETF best of video without talking about actual yields. Well, this section here isn't the best yields of the year. This is just what is currently the best yields. If you were to buy today, day of recording, which is Saturday, December 14th, albeit markets are closed today, but if you were to pick up one of these funds today, this is what the yields would be. So once again, no surprise, single stock ETFs rule the roost at the top. Harvest with a bunch of commanding, high teens, low 20% yielders. Now, again, single stocks in of themselves aren't really my thing. I got out of single stocks to be in a diversified funds like ETFs just to make life a little bit easier. But that doesn't matter. These are popular. These are very popular funds, and we can get outsized performance, outsized yields with them if you so choose, and you need that for boosted income. So again, there's nothing more really to discuss with the single stock ETFs. We've already kind of covered that plenty. The more interesting funds, in my opinion, just to discuss are these funds down here at the lower rung of the top 10 yields that you get, which are not just diversified funds, they are sector funds. So once again, we can see the consolidation. Once we get out of an index and we get down into a specific sector, especially on the Canadian side of things, there are a couple of sectors here in Canada that have outsized dividend payouts along with the CoveredCall ETF premiums that are released, and also volatility plays a part in that as well. So we got energy, ENCL at 18.16%, EBNK, which we had just covered earlier, at the highest financials yield out there at 18.13%, HPYT, very popular bond CoveredCall ETF, 17.8, and then a newer fund by Evolve, which is Utes, covering Canadian utilities. I should also mention that ENCL also covers, as it says in the title, Canadian oil and gas. So outsized yields, ENCL and Utes, I'm interested in picking up for a non-registered account, which I don't have yet, but I'm waiting for. I'll be waiting for the sale of my condo to put that equity into a couple of funds like ENCL and Utes. Utes are a little bit newer, so I got the time right now. I'm kind of forced to wait just to see how Utes does, and I mean ENCL has already been around for a while, so and especially with tariffs and Trump coming into office, it might potentially hurt the Canadian oil and gas for a little bit. I mean, if it's short-term pain, it might be good timing just for me at least, just to pick up a fund like ENCL. I won't be picking up HPYT. Many of you know I don't care about bonds, never have. Let's just own good, strong businesses. And then, of course, utilities, dependable, telecoms, pipelines. What else do they got in there? They don't have any railways in there. So it's pipelines, telecommunications, and just sort of your average, Hydro One, Amera type utility businesses in there. So anyway, those are the top yields that you can get from the Canadian side of things right now. Moving on to some of the lowest fees that you can get from some of these funds. Granted, we're looking at MERs right here. For those who are not familiar with MERs, what is an MER versus a management fee? Keep in mind, an MER is probably the most important aspect of the fee. This is your all-encompassing costs, meaning the cost to run the fund, maybe the cost of leverage, maybe trading costs, maybe marketing costs, other custodial costs. It's the all-in cost to manage the fund. So these MERs were updated back in July, and I'll probably do it once a year. So next July, I'll update it. And I'm sure what we're going to see I would suspect that we're going to see lower MERs with more funds, more competition. We're going to see potentially lower MERs here. But anyways, we got a bunch of, what do we got? A bunch of bond funds in here. We got financials from Global X. And actually, you know what? We got like just a pile of Global X stuff in here with some of the lowest MERs out there currently. One Hamilton fund with HMAX at 0.65. I would say that the average, not necessarily MER, but the average management fee of a lot of CoveredCall ETFs, again, if it doesn't have leverage, is probably around 65 basis points up to maybe 70 basis points, right? 0.65 to 0.70. Again, with life in here as well, you got 0.68, so running around the average. But on the MER side of things, when you're taking into account all of the costs, then yeah, this is certainly on the cheaper end. Now, MERs and fees with covered call ETFs, usually that's one of the more hot topic issues when it comes to covered call ETFs in comparison to, low fee, plain Jane vanilla index investing, tracking things like the S&P 500. Just keep in mind that these are this is like active management versus passive management with those kinds of funds, right? So on this side of things, stock selection, options trading, it just demands and is more energy intensive that way. And just keep in mind different purposes, right? If you're into covered call ETFs, then total return or absolute return, probably not the most important thing for you. I've said that many times on the channel. That's not why I'm in them. So keep that in mind with fees, especially if you're newer. So this might look like higher fees, but I mean, if you're only into the income, this is definitely on the cheaper side of things. Okay, so now we're looking at the 2023 Canadian tax tab, which I'm going to be updating on the covered call ETF AllStar tracker come April. That's typically when I did this tab, was updated all in March and then released it in April of 2024. But what we're looking at here is basically the most tax efficient funds. If it's 100% return of capital, you're paying no tax on it. Now, return of capital, once again, another hot button issue, and there's a lot of complexity around it. I do have some videos in a tax playlist if you need to figure that, if you want a little bit more education around return of capital and what it all means. But all you really need to know is that if you get into this fund, and for at least this tax year, 2023, you would have paid nothing, zero. Now, I should also point out that what I've done also in here in the tax tab as well is to show, for those who are familiar, if you bought one of these funds that were 100% return of capital, and let's just say it's always return of capital, okay? At some point, that return of capital transitions into capital gains. So what I've done here is there's a calculation made that if you were to hold these funds and you just lived off of them, you didn't reinvest, you didn't trade, you didn't sell it off, you just held it forever, this is how long it would roughly take for these funds to turn into capital gains if you just held it for forever. So the timeline is quite long. But especially with the upcoming tax year, what I'm going to probably do in this tax tab is what you see here. You'll see 2023 return of capital, but beside it, you'll see a 2024 return of capital. Now, I've also broken it down by percentages over here. So the true numbers, if you're going through this tax tab and you're going through it, lots of different numbers, lots of different categories. These, whatever that is, 6 categories. These are the main breakdowns of all the ETFs by numbers, but that's a little hard on the eyes. It's like, what does that really all mean? So I've included percentages in here to make that a little bit easier to understand. You can better understand, okay, most of my tax factor summary is coming from the return of capital, very tax efficient. Maybe you just picked up the fund, so I'm not paying tax here. The next bit of tax efficiency might be on the eligible dividend side of things, capital gains. And then foreign income is by far the least tax efficient, which will get taxed at your marginal tax rate. So anyway, if you're looking to pick out some funds, the tax tab, absolutely gold when it comes to that. All of these fund providers, they have tax factor summaries that you can look at yourself if you need to double check. Some of them a little bit harder to find than others. Like, Hamilton's was really easy to find. You can easily Google search it. BMO's not easy to find. Really not easy to find. In fact, BMO's, did I have to dive deep to get their tax factor summary. Like, there were things I had to add up like throughout the year to make their tax factor summary possible. So anyways, that's what you get, the most tax efficient funds out there currently. Good to see a fund like QQQY is in there, as that's a fund I picked up. I have EQCL in my portfolio, albeit this is all in my TFSA, so it doesn't really matter. But there are some notable funds in here that if you're looking at a particular fund because of performance, also check out what you might be paying in tax as well. And you might end up second guessing yourself if a particular fund is doing well, but it has, high, say, foreign income, whereas maybe a similar fund has, right? It has basically everything tied up in return of capital. Well, I said we would look at some all-in-one ETFs. These are what I'd consider the cornerstones of any income investor's portfolio. This is going to be sort of those foundational core investments that you have in there. They have really respectable yields if you bought them today at close to 10%, a little over 10%. Again, these are ETFs that invest in other ETFs. Some are more index based than others. Some invest just totally in different various sectors. So you get quite the mix of different strategies, indexes versus stock selection in there as well. They're trading close to their all-time highs. Most of them are relatively newer within the last couple of years. This is already filtered total return-wise. So you can see HYLD.U is the top performer. This is a fund I own, same with HYLD. I basically own everything in here minus ZWQT and HBIG and HBUY. Most of them are leveraged at 25%, other than BMAX at 33%. Everything else is 25% if it does have leverage on it. I guess the only kind of or I would say the two funds that are lacking in performance here are these two funds, but they both hold, I want to say it's 40% bonds. Now, they are newer in the sense that they both had distributions. Their first distributions came out in May of 2024. One of them is leveraged over the other, so we're not seeing much of a big difference. Between the two, or where that leverage is really helping out. But all these other funds, you can kind of clearly see where the leverage is helping out. HDIF, the leverage is helping out, and same with the cover call rating, right? There's a much bigger difference between the unit price and the total return price of these funds. All right, if we're moving, we'll move across the side here. We can see what their AUMs are all at. Nothing at $1 billion, but HYLD high up there. It's, I think HYLD eventually will be a $1 billion fund. I have no doubts that HDIV as well. EQCL is sort of my dark horse AUM favorite. This is the fund that I really want to see pick up extra steam. And it's month over month, it's done actually really well. I bought this fund really when it was fairly newer, maybe had about 10 million. It's been around for about 14 months, I want to say, 14, 15 months. And month over month, it has the odd 3% growth, but it also has 20%, 10% growth in its AUM. So this is the one fund I really want to see, continue to grow, because I also picked it up when it was a much lower AUM, and everything else is just holding its own. HDIV at $426 million. ZWQT, again, small funds. It hasn't really done as well as maybe many thought it would. Again, it's very similar to EQCL in that it's diversified globally, and it's focusing on things like developed markets, emerging markets, Canada, the U.S. But EQCL just it hits the mark, and I think in a lot of good ways. It's got 25% leverage. It's got an over 10% yield, which ZWQ does not. So I think EQCL will continue to see, respectable growth month over month, and ZWQT. Again, we'll see what happens with it, but it could certainly use a little bit of a punch just to get it going. And then we got lifetime changes in distribution growth over here. We can see HYLD has seen a tremendous amount of distribution growth this year, but HYLD is making up for the fact that it had a 14 cent payout in 2023. It slashed it down to 12, and it's basically been recovering ever since. But there's been some nice growth from the distribution side from HYLD this year to get it above where it originally has been. HDIV, it's never cut its dividend since inception in 2020. What is that? 2021. July 19th, 2021. Seen 45% increase, which is great to see. HDIV, healthy fund, never cut its distribution, and has just been going gangbusters with that distribution growth. Same with BMAX, done really well this year as far as growth is concerned. I think it's had 2 spots this past year where it's grown. And then HDIV with it's had 1 increase this year for many of its other funds. I believe some of the utility funds by Harvest and the technology funds were just raised, but it is not reflected in HDIV. So perhaps with another increase from other sector funds within HDIV, then we might be able to see this one raise as well. Last but not least, let's end by looking at some of the highest to lowest performers in every single sector here in the CoveredCall ETF AllStar tracker. So what we're going to be seeing here is, to start off with bonds, I don't think, with the anticipation of interest rates being lowered heading into 2024, and then as they got lowered, it almost has this weird reverse effect of 2022 when we thought bonds would be a bit of a cushion. We thought they would rebound, and they just never really exactly did that. And especially with CoveredCall coverage over it to try to help boost the yield, just hasn't quite done that. So I prefer to own strong businesses. So for me, I'm not going to be getting into. I don't get into bonds. In the crypto space, not much to speak on when it comes to crypto, but Bitcoin is king, Ethereum is not, and that reflects in the year-to-date price performance. As far as diversified Canadian funds, an interesting point of note here is you have funds like ETSX and CNCL, and CNC as well, but CNCL is just the 25% leverage version of CNCC. ETSX, on a total return side of things, is outperforming basically the exact same, structured fund than the one with leverage. So unleveraged ETSX, a leverage fund at 18.35%, a little bit of a unit price difference here and here. So a little bit interesting in that regard. I'm just going to skip over global, go to the more interesting stuff. Diversified USA. And here again, USCL, it certainly makes up for the lack of performance for CNCL versus ETSX. 38.33%. The other, I would say the other non-leveraged version from a different fund manager, ESPX at 24.57%. Still really well. It's still a great return. It's just USCL with that leverage, and it tracks the index. As you guys know, it was in the top 10 of top 10 performers from the Canadian tax tab. So, or not tax tab, but the top total return tab. All right, so let's move down to energy. Who are the best performers as far as energy was concerned? No surprise here. ENCL, the king of the CoveredCall ETF energy sector, It has a leverage version, a non-leverage version. Then we got ZWEN by BMO, in kind of the middle of the pack, EMAX, and then NFX. No, it's just ENCL is by far, it has no competition. There is no competition out there right now. Strong selection on Global X's part for 10, I believe it's 10, oil and gas stocks, Canadian gas and oil equity stocks. Moving down to financials, we got big rebound here in 2024 with financials. A call at the top, ZWK following up behind. Many of these were in the top 10 performers. Some other, I would say maybe some other interesting funds in here are things like bank at 27%, high yield. So to get that kind of performance with like a 16 to 17% yield attached to it, pretty good on that side of things. Even BKCL, 25% leverage, along with banks, 25% leverage, doing quite well at 20% on that rebound. Then we got healthcare, a bit of a mid-drift kind of sector here in 2024. It's not like it did amazing. It's not like it did the worst. It's just some of the funds ended up doing a little bit better than the others, certainly trailing the major indexes like the S&P 500, HHL.B, the best performer at 19.81%. And then they kind of trail off down below. So leverage would have really helped you if you got into this sector. Then we have the indexes. We have some mining. Really interesting on the mining side of things is that the best performers were anything that focused on gold did really well, whereas base lags behind. I actually don't think base is like a terrible fund. It's actually it's a unique kind of fund, more or less focusing on rare earth minerals, things like cobalt, nickel, lithium, things like that. Globally diversified. I should say all of these are diversified. And base, I want to say, for the first time, you can get this for with a 10.5% yield. It's the first time this year I'm seeing a significant yield from base in that regard. I had base on my watch list for the longest time before I got totally out of sectors for now and decided to just go the all-in-one route. But I've done videos on base, and I actually really like that fund a lot. Despite it being down, I think there could be opportunities here, especially if, war, tensions, geopolitical strife. If inflation picks up again, base could be a really underrated play, that for sure. Real estate picked up this year again, but highly, trailing behind the major indexes, even though it did rebound, get a little bit of a return there. Technology, no surprise there, just everything did well in technology. So not much to say there on the technology front. We've already covered so much of technology. Anyways, that's it for the best of CoveredCall ETFs here in 2024. If you like what you saw, then hit all the buttons of the like and subscribe variety, and I'll see you all in the next video.